Back to another video. Now today we're going to do the weekly breakdown for the indexes as well as the precious metals. Now if you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. Now if you enjoy the content, please smash the like button for the YouTube algorithm, and as always, let me know down in the comments below exactly what it is that you would like for me to cover in my next video. Now today we are going to take a look at the US30, the Nasdaq 100 as well as the SNP500, the German 30 as well as the gold as well. And we're going to do this from a technical perspective. Now one thing to keep in mind is that we know last week the Federal Reserve had spooked the markets by saying that they're going to do whatever it takes to tackle inflation, meaning if they have to aggressively hike interest rates, that is exactly what they are going to do. Now keeping that in mind, we're going to go through the technical analysis because higher interest rate hikes means negative for the stock market. So without any further ado, let's jump straight into it. Now we're going to start with the US30. Now starting here on the monthly time frame, what do we see here? Now firstly, the price action is quite clear. Market printed this massive impulse, that correction. There's definitely a continuation expected to the downside. Now if you take your Fibonacci from the high to the low, you can see how the market tested and rejected the 61.8. The market also gave us this confluence of this head and shoulders pattern that the market had created, which is considered a bearish pattern from a technical perspective. Now if you drop down on the weekly time frame, what do we see? Now from a weekly perspective, price action is very clear over here. Now if you look slightly left over here, you can see you can see how the market had most recently tested the strong level of resistance. Now this level over here acted as a level of support. The market broke below that support, that came to test it as resistance, and the market's back to test it as resistance once again, giving us a further confirmation that there is a continuation expected to the downside if we should see any move to the upside happen. Now if you drop down on the daily time frame, what do we see? Now here from a daily perspective, last week the market had unfortunately created this structure. The market broke below that structure, so we can definitely, going into next week, we could see this market continue lower from exactly where it is now. So you can be looking for short-term selling opportunities from exactly where the market is now. And once again, we do have the confluence here of this head and shoulders pattern that the market had created. We also have that impulse correction, and we expect that next impulse to the downside. Next up, we do have the Nasdaq 100. Now starting on the monthly time frame, what do we see? Now it's quite clear because we've spoken about this pair before. The market is currently testing and rejecting strong previous support, that's then the resistance. There's a good opportunity for the market to continue lower. We also had this candle with this long wick where we expect the next candle to go and fill in the wick. So we can definitely expect the Nasdaq to go and test that previous level. Alternatively, we would like to see the market continue lower. Now here from a weekly perspective, price action played out very beautiful. We can see how last week the market had tested strong resistance that acted as support there. Market broke below that, again giving us the confirmation this move to the downside is definitely expected. We could potentially see the Nasdaq starting this consolidation phase. And if you're thinking, well, why would that happen? Well, the question is, why did this happen? Any case, dropping down on the daily time frame, what do we see? Now here from a daily perspective, the market had most recently completed the information at the neckline. So we had that information, the market never pulled back. However, the market is currently testing strong daily support. Now if you take a look to the left over here, you can see how this level of here acted as a level of resistance. Market broke above that, tested it as support multiple times. Now there is a good possibility for the market to pull back before we see this move to the downside continue to happen. Now ideally, I would like to see the pullback take place as far as there, then continue lower. Alternatively, the best way to approach the situation is to wait for the market, is to wait for a clear daily close below this level, and then on the retest we can start looking for that continuation to the downside for the market to go and test that previous level of monthly support as identified from a monthly perspective. Next up, we do have the S&P 500 starting on the monthly time frame. As always, what do we see now? What we can see here is very clear price action. Firstly, we can see how the market had printed this information. Now, I've spoken about this pair so many times when the market was sitting at this level, explaining all of the reasons why we can see that pullback before the continuation. Now, the market had just completed this information to the neckline. Now, we can see there we had an information, market pullback to the neckline. And we can definitely expect that continuation to the downside there as well. Now, from a weekly perspective, what do we see? Same type of price action. Now, firstly, I'm not going to go too aggressive about this, but we can see how the market is currently testing the structural level that it had created. Support, resistance, pullback is expected. It's kind of the same price action on the Nasdaq and the SNP500 there as well. Now, from a daily perspective, what do we see? Firstly, we can see here this is going to be the previous level of structure that the market had created. Now, this level over here acted as a level of resistance. The market broke above that, came to test it as support. Support did not hold. The market then came back, tested it as resistance again. In doing so, we also had that information once again to the neckline, giving us a further confluence that we can expect that continuation to the downside for the market to go and hit this level over here. So that's going to be the first target level for the S&P 500, and then from there we can start monitoring price action once again, see what kind of fundamental data and sentiment data we get coming out around this level, and then start looking for continuation. So we can just buy it back up and then sell it back down again, because that is what we do for a living. Now, next up we do have the DAX index over here. Now, I've done a breakdown on this pair in particular, explaining all of the reasons the market was sitting at this level, explaining that. But I'm going to give you guys a full breakdown. If you want to check the breakdown out, I've done it on my Instagram. My Instagram is the same as my username. Now, the price action here is quite simple. Consolidation, break, retest. I can definitely expect that continuation to the downside there once again as well. Now, from a weekly perspective, what do we see? Here on the weekly time frame, we're at this massive impulse. After an impulse, you expect a correction. The best way to measure that, so take your Fibonacci from the high to the low of the impulse. We can see the market tested, rejected the 61.8, also known as the golden ratio. So there's definitely a continuation expected to the downside for the market to go and test that previous weekly support there as well. We could potentially see the market print a information, and for an information to be valid, the market needs to print an equal low as well. Now, from a daily perspective, what do we see? Now, this market is literally hanging on a piece of, this market is hanging on a support, live support and support, but we have the same type of price action here. We have this head and shoulders pattern. We have support got broken, it's now thin resistance, which is enough confluence to give us an indication that we can expect this move to the downside to continue for the GER30. So that would kind of be the first take profit level over here, and then potentially start looking for that continuance, that continuation to the downside there as well. But as traders, we have to be reactive and not predictive, and learn to adapt to the ever-changing market environment. Next up, we do have gold. Now, I've spoken about gold. I'm not sure if it was on Instagram or YouTube, when the market was at that level, explaining all of the reasons why we can expect that move to the upside there as well. But I'll give you guys another breakdown, and I'm hoping that most of you are able to get into that move there as well. Starting on the monthly time frame, what do we see? Firstly, we had the strong level of resistance that the market finally broke above and closed, and that tells us that all of the support came to be tested as a resistance, and we can definitely expect this move to the upside as the US bubble continued to blow higher and higher and higher. On the weekly time frame, we're at this massive impulse. After an impulse, you expect a correction. Now, if you take your Fibonacci from the low to the high of this massive impulse, you can see how the market not only tested and rejected previous level of resistance and support, but the market also tested and rejected the 61.8, giving us a further confluence that we can expect this continuation to the downside to happen there as well. We're going to use this as a long-term target in the market there as well. Now, from a daily perspective, what do we see? Now, here on the daily time frame, we can see based off last week's close, the market had basically almost but not yet broken above that structure. There is a high possibility for the market to complete this W formation to the neckline, and then potentially see that continuation to the upside. So you can see here is we do have this W formation that could potentially take place. Alternatively, if we do get a clear daily break on Monday, then we can definitely start looking for that buying opportunities. That's if you're not in the trade yet, because I've done a breakdown on this candle, and we can see that is exactly what the market had done there as well. Now, that is it for your daily dose of indexes for this week. I want to say thank you for your time, thank you for the support on the channel, and if you do know of anyone else that would like to view the content, please share the video. And as always, if you enjoy the content, please smash the like button for the YouTube algorithm. Thank you for your time, and as always, cheers, fair years.